Good morning. It is February 27th, and we are going to start our prep for the ES today. Were you ready for the washing machine yesterday? We said in the morning to watch for the downside move into the afternoon, and that didn't let us down. We'll review how we can see this and time it with our levels today. First, just a quick reminder that derivatives trading is inherently risky and past performance is not indicative of future returns. So yesterday we had laid out that it was likely going to be an upside move early, and we would see the insurance buying for Nvidia earnings begin to come in the afternoon. And we had the upside move early until about 11:30, and then we stayed sideways until 12:30. We had our levels, we have our plan. We also want to focus on timing these. So if we're looking at 11:30, we don't have our insurance coming in yet for the day. Then by 1 o'clock, we did. So that shows us between that 12:30 and 1 o'clock time, we could see when we watch this minute by minute or at 5 minute intervals, how fast that's moving. We could see that the downside was coming. Then how do we look for it to bottom? So if we look at the scale of where it is by 3 o'clock, it's now coming back under. So it was up here at 1 o'clock. Now it's coming under. So at 3 o'clock, we are looking for the market to bottom. And as all of that demand for insurance is done, now the insurance providers to move the market back up. And then by 3:30, we saw that that was actually happening. And again, we watched this intraday real time, but we had our move down until bottomed at 2:15, retested at 3. That's where we know that all of that demand for the insurance is gone. And then we've just moved up as we are devaluing that insurance. And this is, again, following the flows and understanding what's happening in the market can give you a large edge if you're trading your own levels or using ours and understanding the timing of these moves because it is all a business cycle. And that is what we watch for now. In terms of today, we are looking for an unwind of the insurance earlier in RTH. And from our catalyst standpoint today, our big catalyst is really tomorrow with PCE. We do have preliminary PCE at 8:30. And other than that, today we have a lot of Fed speakers this afternoon. So we'll watch as the market is sensitive right now to any comments on rates or sentiment from consumers and Fed policy. So we'll watch for that ahead of each speaker at 11:45, 1 o'clock, and 3 o'clock today. And then we have a 4-week auction at 11:30, which isn't likely to be that moving. When we get into the higher time frame bond auctions, that's when we're likely going to see bigger moves. So we'll pay attention to more the 5, 7, 10-year auctions. So tomorrow is going to be the big one with PCE and consumer spending because we're getting sentiment from consumers, but we actually want to see where the money is. So how do we use that today? Is we will look at our levels and we'll review those as well as our outlay of flows, but we would look for that insurance buying to come in the afternoon since the data comes out pre-market. So we look for the highest volume during RTH, and we will break that down today. So similar to yesterday, we'll look for that afternoon session insurance buying, and we'll also look at the Fed speakers for that. So we look at our systematics today. We've got about a $500 million bid, so $500 million sitting between 59.55 and 59.85. Then we're really non-participants with only about $200 million in an offer. And we really start to see this at the edges where we get at 60.45 and under 58.90, not 58.95, which is our low end today, where we bring in a $5 billion offer on either side. That's going to be key because on the upside, that'll be the resistance point right ahead of our line in the sand. Our line in the sand sits above us at 60.76. We do have another minor line in the sand sitting down at 60.20 this morning. And we have that $2 billion offer also sitting around that 60.20. So that's going to be one that we watch, but it's really the 5 billion that we want to pay closer attention to right at our upper pivot area. And so we're looking for that rotational price action today to stay inside of yesterday's range between 59.50 and 60.22. If we get outside of that, then we watch that $5 billion offer. And if we break, again, we will then look for signs of lower, but we don't have a strong seller in the market. So we would really need to see some increased demand for insurance coming in, another participant to jump in and want to play ball, or we'd need to see our market makers shifting and having more in terms of an offer sitting there around maybe 6 or 7 billion instead of the 3 or 5 billion that's sitting here right now. So that's what we would watch for on the downside. And again, timing today, we'll look for that insurance buying to come in later in the afternoon, as again, traders will want to position for that at the last minute. They want to wait till the storm's almost upon them and then buy the insurance. And once everybody's doing the same thing, we get this exaggerated move. That's what we would look for again today. If that doesn't play out and people go into PCE and consumer spending uninsured, then we open the door for downside, like we've mentioned before on other catalysts. That when there is no insurance, that's when the downside is opened up. When there's insurance, it dampens everything, compresses the market, and leads to a more upside favor. If we don't see that, then that's actually going to be another sign for tomorrow morning that we want to be more short bias then. And our upper edges today and lower edges, again, we mentioned that 58.99, and then right at our line in the sand at the 60.80 area where we bring in a $10 billion offer. That's going to be the upper edge. If the market goes trend up for the day, that's what we would watch. So have a great day, everybody. We will not have a video out tomorrow, but be safe trading for the rest of the week.